Hey guys, Mike here. So, got another loaded video for you, and we had some crazy stuff happen pre-market, really overnight. News coming out of China, which we'll talk about. You might notice those stocks were going through the roof today, and it kind of reminds me of either '08 or 2020, something the Fed did here, which helped those markets bottom out. And so we'll see if that's the case and go into more detail on that. Also, some economic data we got, which of course the market did not like. And I'll show you that. And I'll show you something you can do with this data if you really like to break it down and learn cycles and stuff, because I think that could help you out. Also, is smart money sending us a message? I don't think it's a coincidence when rate hikes are all of a sudden starting to decrease in March, or the chances of in March. This is starting to happen right now because remember, the bond market is more conservative than the stock market. The stock market is like a drunken sailor in Vegas, right? And the bond market is not. So, you can look at the economic data that came out, and we'll go into some charts, especially like fintech here in detail. The Richmond Fed Manufacturing Index came out. Again, look at this, -5 versus -8, still in contraction. New orders worsened. Shipments remain in contraction. Employment fell sharply by -15. So you can see it's just a mess. And this thing has been dropping since 2021. Pretty much. And what happens is this goes in cycles like everything else. It's kind of hard to tell on this chart right here. But if I take you over to Trade View and we look at that, you can almost upload anything in Trade View. So I'm always love this. But just type in there Richmond Manufacturing, and then of course you'll see it pop up right there, and you can click on that one right there. And when it comes up, it's a little bit easier to see in this one as far as the cycle and stuff. You have the services and the manufacturing. We'll take a look at both. Because remember, what are we? We're 70% services, right? Now, and when you look at the manufacturing, this goes in cycles, okay? And you don't want it below the zero line, right? Zero means contraction. We'll put the line right there for zero, okay? And you can see we were well into contraction. But if we try to draw a line here on it, you can see a little bit better. Like this basically just kind of circles and cycles, right? Goes up, down, up, down, up, down. Great, woohoo. When it's going up, by the way, everything's hunky-dory. Stock market's loving life. When it's going down, it's like, maybe not. Until now, of course, it's like, who cares about manufacturing, which is kind of crazy. But that's kind of how it is. We got faked out there as we thought, okay, this was the part of a new cycle, and then it ended up dumping back down. All right, because again, manufacturing all over the place. I don't care if no matter what chart you pull up, it's a disaster, right? Now, you pull up the services. Wow, there's a zero line. Man, we don't really fall in contraction, do we? Not really. You still see the cycles that are happening. But look, this is above now, right? So this is out of contraction again. And when you pull back, you can go back to like previous times where you've seen recessions, and what happened? We're below the zero. It's falling off a cliff. This is what's happening going into the recession. And here, actually, you see it kind of bottomed out over there in 2023, maybe like looks August maybe, and started coming back up. So that's actually improved. And since that makes most of our economy, I think that's why the manufacturing data is being ignored right now. Now, when you look at HYG and S&P, right, together, okay, usually HYG leads it. It's the smart money. You can see what's happening since really these rate hikes, the chances of them in March have started to dwindle. All of a sudden, it's setting lower highs. S&P is still setting higher highs. And so there is that divergence, right? Usually when this happens, it can take time. Usually you'll end up getting a sell-off if this continues. So we'll look to see if it continues to set lower highs on here. Because right now it's really just wedging because it didn't set a new lower low, right? But it did set lower highs while the S&P continues to go up. And so we'll see, especially going into February, which tends to be a rough month anyway, if this actually plays out and we end up getting a sell down. I'll keep you guys updated on that. Now, you might have noticed something with the Chinese stocks today. And guys, before we continue, if you can please hit that like button, that little thumbs up down there, helps people find the video, helps out the channel. And if you like down-to-earth content, talking about the financial markets, don't try to talk over your head, then think about subscribing. As you can see, you got C-Web, JD, BABA up almost 8% on the day. I mean, they were rolling, right? And when you look at BABA individually, you can see a huge gap up right there. I'm going to draw that trend line back down. And you see the RSI was like it wants to do a bullish MACD cross right there. Now, again, we've seen these pop-ups when you look at the chart. Go up ahead, you see many moves up because they keep announcing certain things, right? Well, this one was kind of interesting. As I told the members this morning in the morning news brief, it reminds me of either '08 or 2020 when the Fed just bought up everything, right? So now, instead of just trying to either cut rates or tell the banks to do certain things, like, you know what? let's just put aside some money and we'll just start buying stocks. Beijing might seek to use about 2 trillion won or 278 billion from offshore accounts of Chinese state-owned enterprises to buy onshore shares. Bloomberg cited people familiar with the matter in the report, adding that some of the measures could come as soon as this week if approved by top officials. And also Alibaba's co-founders, they bought like 200 million worth of shares of Baba, so it definitely helped Baba out. And there's going to be a rotation, guys. At some point in time, it's going to happen. I can't predict when, but when you look at this, this is the Hang Seng Index along with the NASDAQ 100, and you can see normally they kind of move in tandem. You can see right here. Then all of a sudden, there was a huge divergence when we start to scroll forward here. And again, like I said, they move in the same direction. But when we kind of go forward and we get on the weekly here, you can see what happened was the Hang Seng started selling down in 2021. Well, of course, the NASDAQ 100 started crashing in 2022. And then the recovery happened in 2022. The Hang Seng just kept on going. So you see this huge divergence. And eventually, one gets overpriced, one gets so far underpriced that they're like, okay, it's forming a bottom, let's go. So eventually there will be a rotation back into this. Again, I know we talked about the real estate market is a hot mess and everything, but remember, when do markets bottom? Well before their economies bottom. Now, of course, in order for this to happen, foreigners have to stop exiting Chinese equities. You can see this breaks it down by quarter, right? And you see in quarter three, quarter four, and then look at now. I mean, already, we're not even through January yet. And look how much people are pulling out of this, right? Because they don't trust Chinese government. They don't trust the real estate market. It is a disaster. I don't know how you fix that one, by the way. But again, just kind of reminding you of what the Fed has done in 08 and in 2020, where they're just going to start buying up everything, right? And so if they get desperate enough, that's what you're going to see. So just keep that in mind. Again, that line on the Hang Seng, if it breaks above that, that's how the Hang Seng Index actually trades. That's when it usually does a big breakout. Now, Tesla got saved by Jim Cramer. There's always this inverse Cramer ETF out there and everything. Usually when he says something like this, the stock he's talking about or Bitcoin or whatever it is will start to rally or drop, whatever he says, right? And you see, what is Tesla? It's oversold right now. Again, when it gets oversold and it has so many weeks of red, usually it ends up getting a pop. But when we pull out here, obviously we know we got earnings tomorrow. And this is what we talked the other day with this oversold, right? Is it going to be it come down right here and just pop up, or is it going to be one of these? And it looks like it's going to be one of these, or what it's turning out to be, right? Where it came down, had a nice pop up or decent pop, and then sold back down, right? And it's some form of support. And you can see this one did basically kind of the same thing, right? So it's still just grinding even lower into this RSI right here, coming down that support around like 106-ish, somewhere in that area right there. And so far buyers have came in, at least retail for now. Because remember, we do have earnings tomorrow, so it really depends on what Elon's going to say on that call, man. And then you got your weekly expected moves anywhere from 197 to 227, and of course, we've already broke all these trend lines for this point in time. It's got a lot of resistance going above it. Again, you start breaking 206 just somewhere in there, you're looking at 195, then 185. And so a lot of this is going to depend on what old Elon has to say on that call tomorrow and how the earnings are going to be and what he's talking about with China as well. Now, one of you guys asked me to cover SoFi. Obviously this is fintech, right? They move as a group usually. This one's holding on to that 200, plus got good support around that 775 area. Wedge between the 200 and 100 actually. Looks like it wants to try to do a bullish MACD across to the bottom. Has not happened yet. Needs to get above that zero line. Again, not a lot of momentum in this name, okay? Now, understand if we try to look at this and you go, okay, if it does continue to move up, gets above the moving averages again, right here you got a daily fair value gap. If it can cut through that, usually they'll react and move back down and then start to move back up. But let's say it cuts through it and then reverses, come back down and retests it, turns it into an inverted fair value gap, uses it as support and come up and fill this RTH gap right there, right? And so we know most RTH gaps above feel more than RTH gaps below, right? That usually happens on earnings or some bad news, right? And it's just where the opening price is either lower than the closing price or higher than the closing price. That's when those kind of gaps happen. But you can see, looking on the weekly here, still sitting in this area, right? It's been in that box since basically the beginning of 2022, okay? So 2 full years and then some, basically. And so if it can ever get out of that box, you can absolutely, just because of the way it crashed down, make a move, probably, anywhere from 13 to 14. When you look out on the weekly, it looks like it's just wedging, right? It looks like it's just wedging in there. So it can keep wedging for another probably 2, maybe 3 months if it can't get a big move above. Now understand why this one moves like it does. Okay, I get this question on why. How come all those other, like fintech companies move so much faster? Understand this is a SPAC, SPAC, right? A special purpose acquisition company. You remember those back, what was it, 2020-ish? Were all over the place. Most of them did not survive. Most of them are penny stocks now at this point in time, if they are around. And what you get in this is a lot of shares issued. So here's the shares outstanding. Okay, you see a whole boatload of them. Okay, you see the float. It's huge. All right, you may think, wow, really, that's big? Yes. When you go over, let's compare this to a firm. Here's a firm right here. Here is its shares outstanding. SoFi has almost 5 times as many shares outstanding. All right, and float. Okay, when you look at Upstart, this one's even crazier. It has roughly, what is it, almost 10 times, actually over 10 times, what a firm actually has. So just keep that in mind. Now, this might surprise you. Look at Square. That's been around a while, right? Big company. Go down to this one. SoFi has almost 2 times as many shares outstanding as does Square. Okay, and so again, got to keep this stuff in mind. Now, the one that might surprise you is going to end up being PayPal. PayPal actually has quite a few shares outstanding, which you understand why they're doing what they're doing in just a minute. This one right here has over 1 billion in its float, right? Now, what are they doing that the others aren't doing right now? And the reason why they're doing this is exactly because of this reason. They're buying back shares, right? They bought back 5%. I think they still got another 5% to go of their shares. And so that's why they started initiating buybacks, right? It helps them on the earnings, things of that nature. So they have went over to the dark side in a way, and I say that jokingly, of course, when it comes to this. And so when it comes to, if you're in SPAC, a SPAC, make sure, understand there's not a lot of them survive. They're actually thriving. I mean, you got a DraftKings is one of them. Boatload of shares, by the way. There's another one. It's the only rare earth minerals company in America, but I cannot think of the name of it right now. It's held up decently well, sold off a lot, but most of them are either penny stocks. Elusive was a SPAC as well. That one's what, $2 now. Open Door, I think it is, like $1 or something. I mean, most of them it didn't make it. Overpromise, underdeliver, all that good stuff. But they will have a lot of shares, so they will move like a freighter, basically, right? Compared to a speedboat or whatever, jet boat or whatever you want to call it. Now, when it comes to the index right now, all they're doing is consolidating, right? Over the last few days, all they're doing S&P, the NASDAQ 100, right? IWM had a big move up, sold back down a little bit. So there's not a whole lot going on. I think they're really waiting on earnings. I'll show you a chart tomorrow which shows you why they're probably waiting on earnings. But when it comes to earnings, obviously you got AT&T tomorrow, ASML, a whole bunch beneath it. Then, of course, there's going to be Tesla. Please put in the bottom what you think is going to happen on that one. IBM, ServiceNow is another one. And then when it comes to economic data, you're going to have the flash manufacturing PMI, flash services PMI, and crude oil inventories, which should affect, obviously, oil prices. And as I'm recording this right now, Netflix just reported, and they came in better than expected, up about 7% after hours. And, let me know if you played it. I thought about playing calls, but they were way too expensive. And I just figured, you know what? Market makers going to play around, push this thing up 8%, drop it 4%. By the time the market opens, they would kill all the premiums. But you never know. We'll see. We'll see how it goes. So that one's up. So it's the first one of the big ones to report. But I think we really thought that was going up, right? Because they had the ad revenue stuff going on. They just did a deal with WWE or something as well. And so that was kind of a no-brainer in a way. But yeah, we'll see how Tesla does and stuff. And then the rest of them will start reporting next week as well. So anyway, hope you guys got something out of it. Please hit that like and subscribe button as usual. Really appreciate all you guys who watch and share your thoughts in the comments and stuff. And I'll see you guys tomorrow.